Welcome to Trading Nation. I'm Seema Modi. Once again, the bond market captivating the attention of Wall Street with the 10-year yield hitting a one-week low. Where do we go from here? It's Lakshman Achuthan running the Economic Cycle Research Institute who joins me now. Lakshman, great to see you. Inflation numbers perhaps not as strong as expected, and now we're coming off those highs.
Yeah, off the highs a little bit, but big picture, cyclical picture, the 10-year yield has actually tripled from really low levels since last summer. And to put it in perspective, that's a bigger move than the 2013 taper tantrum. So, it's getting people's attention. The rise in yields, 1,000% in line with our reflation call. 6 months ago, we had an upturn call in the inflation cycle, which joined with the earlier business cycle recovery call. So that's really what seems to be afoot here. And you have a chart up now showing some of those inflation calls. And the right-hand arrow is the call 6 months ago. And I think as simple as it sounds, hey, it's reflation, people don't really understand what an inflation cycle is. And that is what's happening here. You have an upturn call just as we had back in the summer of 16, which is the left-hand side of the chart. And you can see those have some staying power, and regardless of the headline narratives, they persist.
So what does this mean? Where do we go from here as we track the 10-year yield now? And you're right, the speed and velocity of the move in the 10-year yield has certainly been one to watch.
Yeah, I think the underlying trend, regardless of the narratives, is going to remain to the upside. That's the cyclical view.
How much higher, you think?
Well, how much higher? Look, probably higher than expected if the narrative is, and I think it is, hey, the reason why we might expect inflation in the future to go up a bit is because of base effects or because of reopening. The future inflation gauge doesn't care about any of that. It's not based on any of that. It's based on the underlying cyclical drivers of inflation, which have turned up. There's already an inflation cycle upturn. And today's auction notwithstanding, when you look at the expectations, the 5-year, 10-year forwards, whatever, they're all to the upside.
And then you got to also wonder, sorry to interrupt, one thing to note now is $1.9 trillion stimulus bill. That's passed. I mean, how much higher does that feed the inflation story?
Well, look, that'll be the narrative, right? So the headlines are going to be stimulus is doing it, look at the money supply, look at the reopening. This is all of the story. But actually, from where we sit, right, and from that chart, the original chart with the inflation cycle turning points, that is what matters. That's what really matters. And right now, it's to the upside. So this can go probably, it's not transitory, right? So that's the word out there, is it transitory? It is not transitory. It's cyclical. That's different. And the thing is, people can misunderstand these cycles to a huge degree. In 2018, if you remember, after the Fed thought that we had this mission accomplished moment, we're back to normal, all the bond royalty was out there saying, it's the end of the bond bull market. It's a bear market now. And lo and behold, they were dead wrong because the inflation cycle turned.
Mr. Trends, always keeping us ahead of them. Thank you. Lakshman, great to see you. And thank you for watching
Keep looking to the
Trading
upside
Nation.
for now. Thank you.
See you later. Thanks.